A special thanks to REI and Ruda for your virtual property forum. Welcome to my edition, which is focused on the SA residential property market, future prospects and expectations. Thank you for joining me. We'll kick off quickly with a little bit of an overview of 2020 versus 2021 and the predictions. Well, the outlook is positive. Residential property remains the good news story of the economy. And certainly over the period since the beginning of the pandemic, we defy the gloom and doom predictions. It was predicted that the market would decline significantly and prices would come down between 20 and 30%. Well, happily, both didn't occur. The reality was that the market, as we all know, closed last year, 2020, in both April and May, a complete shutdown. Buyers were unable to physically view the properties. Deeds offices were closed. Estate agents, though, quickly adapted, applying tech innovations which otherwise we believe would have taken years to implement. So what you saw was an increase in online viewings, virtual walkthroughs, and business was done, but transactions were delayed until such time as buyers had the opportunity to actually view properties before finalizing the deal. Although in a certain small percentage, properties were transacted with the buyers not actually viewing the properties, buying sight unseen. So if we look at what happened as a result of the pandemic, there were three major events that have happened as a consequence. Firstly, we've had the interest rate cuts, prime from 10 down to 7, 30% reduction in the repayments for the same property on the one hand, or on the other hand, allowing buyers to buy up. We had the bank's propensity to lend. There's been an aggressive competition, and I'll talk about that a little bit later, together with higher loan-to-value ratios, and equally a new trend which has seen a COVID-induced shift where buyers are now suddenly moving back to the suburbs, and we're seeing Zoom towns being the new trend. So, as I said, interest rates, 5 cuts in 2020, important to note, from 10 down to 7% as the borrowing rate. More significantly, the bank's propensity to lend. So we've seen that banks are being aggressively competitive, looking for a market. There's been a strong surge for first-time home buyers. And equally, at the same time, we've had a surge as sellers look to take advantage of the property market. So what do we focus on? High approval rates, 82% approval rates in terms of bond applications, according to Uber. Higher loan-to-value rates, less deposits required, down to 7.8%, the lowest since 2007. And highest concession rate from the banks, in some cases, not all, in some cases as low as 1.23% below the borrowing rate of 7%, equally the lowest since 2007, and an increase in 100% loans given by the banks, particularly for first-time buyers. Overall, what we've seen is a 41% increase granted in quarter 2 of 2021 versus quarter 2 of 2019, in other words, prior to the COVID-19 pandemic. And we have seen 4% more home loans granted in quarter 2 of this year versus quarter 1 of the same year. So the banks are positive, they are looking to lend, and they've certainly helped to prop up the market. Market impact, first-time buyers have certainly dominated the market. The price has increased by just under 11% to over 1.1 million. 1 million used to be the initial entry level. It's now up to 1.1. 54% of all home loan applications are from first-time home buyers. This has come down from 48%, come down to 48%, as I say, quarter 2 of this year. 60% of first-time home buyers need a full loan, and 80% of the applicants are in fact receiving a full 100% loan. Okay, if we look onto the third element, which is the quality of life, we're seeing suburban versus urban living. People who have been confined and cooped up in their smaller apartments are looking for properties with greater space and greater facilities. The work from home aspect is a very, very significant factor on the residential property market as a whole, impacting also, and I'll talk about it shortly, the conversions from the unutilized commercial space in the city centers to potential residential, which has not had the same takeoff as otherwise might have been expected. And thirdly, the Zoom towns, where people are taking the opportunity on a work from home basis to semigrate to smaller towns, coastal areas, change in lifestyle, but still in a position to be able to do the work that is required of them. So we have, as I say, low demand for inner city CBD and apartment living, and this is compounded by one, significant increases of stock coming onto the market, the not necessarily the need to actually have to live close to work as people are working from home. So frankly, it doesn't matter whether you're in Knysna or Mossel Bay or whether you're in the CBD of Johannesburg. Then what we have seen, though, is a higher demand for bigger coastal living spaces, whether they're apartments and lock up and go, or elements that are providing additional facilities. And so we're seeing still an increase in demand for estate style living right around the country. Okay, so the popular areas in terms of the Zoom towns that we're looking at: Cape coastal areas, Langebaan, Hermanus, all along the Garden Route, KwaZulu-Natal North Coast, and KwaZulu-Natal South Coast. One of the features that has been interesting is to see what has the house price growth in South Africa been like compared to the rest of the world. Well, all around the world, we've had low interest rates, and there's been some significant house price growth, but in fact, not so much in South Africa. So 43 out of the 57 global housing markets have seen strong growth. Overall, according to Knight Frank's global house price indicator, just under 7.5% increase. In America, in certain towns, you've had a 16.5% year-on-year growth in quarter 2, 21, and it is coming down at till 12.5% this year, but still very much stronger than in South Africa. And one of the highest we've seen is just under 25% growth in Sydney house prices. Now, you might ask yourself why, given our interest rates are so low. So the factor that really where we are is that our major volumes are in the 3 million and less. I'll get onto that shortly. And what we've seen is that despite the expectation that with the increased demand, with the low interest rates, that prices would increase, our prices have been around the 4 to 5%, confirmed also by the FNB price indicators. And we've seen, in fact, a balanced market where properties have been coming onto the market from sellers as a result of low GDP growth, some being forced financially to sell, difficulty with unemployment, with the riots that we had in July. So you had a relatively good stream of stock coming onto the market together with the increase of buyer activity, particularly first-time buyers, but specifically around the 3 million rand and lower. In the above 5 million, been very quiet, little growth fact in house prices, and still significantly down from our highs of 2017. When we look at the rentals performance, equally, it has been muted. Growth has actually declined. We've had arguably a 10 to 15% decrease in nominal rentals over the period. This is due to a lot of the potential tenants now becoming buyers with the lower interest rates, moving rather into the housing market. And so we are sitting with vacancies, and we have had decline in actual nominal rentals over the period. If we look at the arrears for rentals, we are seeing an improvement now. The metric for arrears has improved to 88.5%, but still 10% above the level below the lockdown. So South Africans still fighting economic issues in their personal basis, and down and below where they were. Still very much stronger, though, than I think in the commercial market. And at the height of COVID, 1 in 4 tenants found themselves in arrears. This has improved to just under 1 in 5, but we think it will improve as time goes on going forward. An indicator to the strength of the market is that time properties are on the market has dropped from Q3 2020, 76 down to 67, and down to 62 days, which one might have thought would be lower, but is still an indication that though there is good demand, buyers are being selective, they're being choosy, and properties are not flying off the shelves, although that the actual turnover numbers are up now to similar levels pre-COVID. Those reasons for selling, we're seeing financial related reasons for selling. The pandemic, unemployment, as I discussed, has it had an impact? Semigration, people are moving, looking to go to those Zoom towns we were talking about. Emigration, around 7 to 10 are listing to emigrate. They are not all selling. I think we always think that people are up and selling to emigrate. A lot of those sales don't take place. The sellers then take the properties off the market and continue to stay in South Africa. And then obviously the major reason for selling is the life cycle, downscaling, upscaling, getting married, having children, etc., etc. What we are beginning to see is an increase in terms of security based on the riots, where people are considering moving to what they call safer havens within the country. So if we look at the increase in sales and transfers, we're back up to just under 22,000 transfers per month, which is back to the pre-pandemic levels of 2019. And the next element, which is probably one of the most significant, and I have alluded to this, is under 700,000 Rand. This makes up 53% of the transactions. Between 700 to 1.5 million, 33%. Between 1.5 million to 3 million is 12%. So virtually 45% is in the very active market that most estate agents are trading in, is between the 700 to 3 million bracket, and that's where a lot of the activities have taken place. We can see above the 3 million is a very small percentage right across the board. What we have seen is foreigners are now coming back into South Africa. Obviously, they were precluded by virtue of the travel restrictions. They are coming back. We have seen increase in sales to foreign buyers, predominantly on the Atlantic seaboard, and we've seen an increase in the above 20 million sales for this period. And what we can see in the Atlantic seaboard, we're at our highest level since 2017. This last third quarter had 32 sales, which is 160% up on 2020 and 40% up on 2019. I think that trend will continue. Foreigners are going to want to be moving out their locked up and small environment. They're looking for space. They've also found that they can work from a distance. And so we are seeing that trend starting to pick up, and I think that will increase over a period of time. Just some of the indications, some of the properties we've sold to foreigners in the Cape Waterfront, in Fresnay, in Camps Bay, just over the last while, and that uptick in demand, I think, will increase. What are we seeing in terms of new supply and developments? I think that developers are coming onto the market, but there isn't an appetite for luxury developments. We've seen, specifically in Cape Town CBD, a whole plethora of new developments coming in. There hasn't been the same take-up because at the moment of the work-to-home situation. As that eases, as people go back to work, I think then we will start seeing greater demand for new developments in inner city living. Projections going forward for 2022, much of the same. We see the bulk of the activity below 3 million Rand. The rate hike expectations, probably a 0.25%, and it'll be either in November or early in the new year. I'm hoping not at all, but not more than 7.5%, I think, by the end of 2022. And we don't see that having a major impact on the market because the buying frenzy that came out just after the pandemic or the first lockdown stopped has tapered off, and we're seeing, as I said, now a balanced market between buyers and sellers. So despite an increase in the interest rates, we don't think that will put buyers off too much. Overall then, price growth remains muted. We're looking at real return, and growth in the market will depend on the economic recovery. Until then, the market conditions remain favorable for buyers, and we think sellers, they will find buyers, but they will need to keep their price expectations in line with the market. A very quick and brief look into the residential market. I trust that you found some value in it. Look forward to chatting again. Thank you very much.